Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the sometimes nonsensical worlds of business filings. And today we're diving into Southport Acquisition Corporation, an interesting little company that has a big decision to make and some important dates coming up. So what's the big story here? Well, Southport is letting everyone know that they're pushing back a couple of important meetings. Think of it like postponing a big party, but for shareholders and warrant holders. This isn't just a casual reschedule, though. It has significant implications for how and when people can get their money back or make their choices. This report is filed on August 11th, 2025, and it's all about a delay. Initially, they had a special meeting for stockholders planned for August 22nd, but that's now moved to August 25th. It's the same location, same agenda, but just a few days later. And this small delay for the stockholders meeting has a ripple effect. The deadline for people who want to redeem their shares, meaning they want their cash back before any deal happens, has been pushed to August 21st. This gives people a little more time to decide. Then we see the signature block, confirming that Jeb Spencer, the Chief Executive Officer of Southport, is making this announcement official. Now, why is this happening? The filing doesn't explicitly say, but these kinds of postponements often occur when a company is trying to get more shareholder support for a deal, or perhaps needs a bit more time to finalize arrangements. It's a strategic move. And it's not just the stockholders meeting. The meeting for those who hold warrants, which are basically options to buy the company's stock later on, is also postponed from August 22nd to August 25th. This seems to be a coordinated effort to align decisions impacting both groups. The underlying reason for these meetings is a proposed transaction with Angel Studios. Southport is essentially a special purpose acquisition company, a SPAC that pulls money from investors to buy another company. In this case, it's Angel Studios. Think of Southport as the vehicle and Angel Studios as the target. Without the deal going through, the investors in Southport might want their money back, and the warrant holders have their own specific rights too. To make this deal happen, Southport had to file a registration statement with the Securities and Exchange Commission, or SEC. This document is like a detailed brochure explaining everything about the deal for investors to review. It was declared effective on July 22nd and then mailed out around August 4th. The company is also encouraging people to look at more information available from the SEC if they want to dive deeper. They're being transparent about where to find these important documents for both Southport and Angel Studios. They're also being upfront about who's involved in encouraging people to vote for or against the deal. This includes the directors and executive officers of both Southport and Angel Studios. Information about their holdings and interest is disclosed in their previous annual reports. It's also important to note that this communication isn't an official offer to buy or sell anything. It's just providing information about the postponed meetings and the ongoing process. And then there's the usual cautionary note about forward-looking statements. This is standard for public companies. They're saying, look, we're making predictions about the future, but a lot of things could change and our actual results might be very different. They list a whole bunch of risks here. Things like whether the transaction will even be completed, whether they can meet deadlines like the SPAC's business combination deadline, or if there are any events that could cause the deal to be terminated. There are also risks about how the announcement affects Angel Studios' business and employee retention. A key hurdle is the ability to get the combined company's stock listed on a major exchange like the NYC or NASDAQ. If they can't achieve that, it's a big problem. They're also warning that the stock price can swing wildly because of competition changes in regulations and the overall economic climate. The big question for any merger is whether the combined company can actually achieve the promised synergies and growth. This hinges on competition maintaining customer relationships and keeping key employees. Even broader global events like international conflicts are mentioned as potential risks, which shows how companies are expected to consider all sorts of external factors. Now let's put on our investor hats and see what this really means. This filing isn't about deep financial performance numbers like revenue or profit, because Southport is a SPAC. Its primary asset is the cash it raised to acquire another company. The key numbers to watch for a SPAC like this are how successfully it can execute its acquisition plan and what the valuation of the target company Angel Studios is. We see here that the trading units consist of common stock and warrants. This means investors are getting a package deal. The ticker symbol for these units is PORT2, and the common stock trades under PORT2. The warrants PORT2W give holders the right to buy a share for $11.50, which is subject to changes. This exercise price is really important because if the market price of the stock goes way above $11.50, these warrants become valuable. The postponement of these meetings is a sign of them working through the final stages of their acquisition of Angel Studios. It's not necessarily a bad sign, but it does suggest that securing the necessary approvals or perhaps getting enough stockholder support is taking a bit longer than anticipated. For investors, this means they have a bit more time to make a decision about whether to redeem their shares or approve the deal. The biggest risk for a SPAC is that the deal falls apart. This could be because shareholders don't vote for it, or because the regulatory environment changes, or perhaps the target company's valuation is questioned. If the deal doesn't go through, the SPAC often has to liquidate and return the money to investors, minus some fees, of course. On the other hand, if the deal with Angel Studios goes through successfully, the success of the combined entity will depend heavily on Angel Studios' actual business performance, its future growth potential, and its ability to navigate the competitive landscape. The list of forward-looking statement risks are not just boilerplate, they are actual potential obstacles that could derail the entire plan. So the direction for Southport is clearly tied to the successful completion of this merger. Their strength lies in their ability to execute this transaction, and their weakness is the inherent uncertainty and risk associated with any SPAC merger. The opportunity is to bring Angel Studios to the public markets and hopefully unlock value. The main takeaway here is the delay is a signal that things are not perfectly on track but are still moving forward. Investors should keep a close eye on the new meeting dates and any further announcements regarding the Angel Studios merger. The valuation of Angel Studios and its prospects in its specific market will ultimately determine the long-term success of Southport shareholders. Now, looking at the financials of a SPAC is different from a regular operating company. Southport's financial health is primarily measured by the cash it holds in trust, which is meant to fund the acquisition and its operational expenses. The number X00000 appears multiple times, which likely represents a financial reference number or an identifier. The dates like Hevel 250811s are critical as they mark key events in their timeline. The classification of KCUS stock they are dealing with, and XISO 42117, US Debts confirms that the financial dealings are in United States dollars. The unit XTEGLI shares is the standard measure for stock quantity. These are not deep financial statements, but rather disclosures about the structure of the company and the upcoming events. The real financial story will be told once Angel Studios becomes a part of Southport and the combined entity starts reporting its operating results. Alright, that's our breakdown of Southport Acquisition Corporation's latest filing. What's your take on these postponements and the deal with Angel Studios? Do you think SPACs are still a good way to invest in emerging companies? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps the channel, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord server linked in the description for more discussions and exclusive content. Thanks for watching, and we'll see you in the next one.